Today I'm going to be talking about what few know about stocks today. This exercise should be a mind blower for many, or maybe it just reinforces what you already know. Maybe you need to hear it from another person. But I think we live in interesting times, and I think there's some fundamental principle. If you put in the back of your head, if you use it in your analysis, will help you understand more about not only what's happening in the stock market, but what's happening in the broader economy. For those of you here for the first time, welcome. For those of you returning, welcome back. This is the Future Done Right show. We talk about the future of business to help position you to do things you need to do to prepare for tomorrow. And today we're talking about what few people know about the stock market today. And specifically, I want to give kind of an underlying principle or idea about what I see. It's a phenomenon I believe built into what we're seeing. And when you use it as part of your analytic base, it really changes how you view things. Now, as always, this is not investment advice. I'm not an investment advisor. I'm here to give you ideas, expand on ideas, help you do the analysis you need to do, talk to your investment advisor, make those wise choices in business and in life that is necessary for us to navigate. And what few people understand about the stock market today is that it is underlying the everything bubble. There's been a lot of analysts talking about this idea that everything is a bubble, and the stock market is the center of it. So one stream of thought is that the stock market is essentially too big to fail, right? It needs to keep going up. It has become such an essential part of the U.S. economy. And we know from past history that when the stock market goes down, people don't feel as optimistic, consumer spending goes down. It really unleashes a whole host of problems. Versus when the stock market's going the other direction, when it's going up, people feel good, there's euphoria, people are spending. And now, as we live in this time where the government spending and the deficit seems to keep expanding, certainly that national debt, which has crossed the 36 trillion mark, on its way, freight train ride to 37 trillion and beyond. And that's just the recorded number. The unofficial number may well be over 200 trillion according to some analysis. When you talk about that size of debt and the money that's coming out into the economy to cover it, right? At some point, people are underwriting that debt. The government is issuing the bonds. They are buying the stuff. People are getting the cash. They got that money to bid around the economy and buy things, right? So the money is coming off the presses as, the military hardware is purchased, as the Social Security checks go out, as all the things the U.S. government spends money on. That money is out there and it is going to get used in the economy. A lot of people think it's going to bid things up. When it bids things up, prices go up, corporate profits go up. There's an artificial one-time hit every time inflation happens because businesses have inventory, and so to the extent you have physical products, that inventory gets to get sold at the higher price one time when you have a lower cost basis. For accounting purposes, it looks like you're making a lot of money as inflation happens, but then you have to rebuy the stuff at the new higher price, and the next time you sell it, you're not going to have that profit margin unless inflation comes in and you get a big profit margin a second time. And it's my personal belief that built into our stock prices today is this kind of inflationary expectation that profits are going to be going up because of inflation. Not only are our businesses going to be recognizing these one-time profits from inflation over and over again, but that profit margin a business has in state today, 2024 or 2025, becomes a bigger profit margin over time because of inflation. That's why a lot of people view stocks as a hedge, and a lot of people think you would be crazy to be in bonds because bonds pay that fixed interest rate, are supposed to somewhat be secure, although there's a lot of questions about that. You have this secure bond that pays you a dividend and perhaps a fixed rate of return, while a stock, potentially that profit goes up as inflation goes up, which pushes that future cash flow expected from the stock up, which in turn pushes today's stock price up, right? So everything's pushing up, creating that upward trajectory. As inflation goes up, stock prices go up, money goes through the economy, real estate prices go up, the everything bubble continues to inflate. And that is perhaps built into expectations with stock today. And then that changes our analysis. In fact, all of us are forced to be speculators. And join me in the comments if you feel this. Right? This is something Tom Blue talks about a lot. It's something I really take to heart and I agree with. Today, the average person sitting here in, the under $1 billion market, you and me, middle class Americans that have maybe some assets but don't have, living off a trust fund type money, where we're out there working every day and trying to get our money to work for us so that we can enjoy a better life in the future, retire, have businesses that succeed, etc. We are forced into the speculation field, right? We have to speculate whether real estate's going up, whether stocks are going up, whether we should be holding gold, whether we should be investing in other physical assets, right? All these types of things are constantly questions that are getting pushed down to the middle class because of this everything bubble, because inflation is built into stock prices, because that expectation of inflation is there, and because government has become such an important lever puller in the U.S. and also the world economy, right? If you look at most of the economies in the world, U.S. and all other major countries, and particularly in the case of a country, say, like China, the government is pulling major levers and picking winners and losers, right? And we have to sit back and guess who's going to win and lose based on which levers are going to get pulled. So we have that difficulty as investors. We got to be the speculators, right? Do you feel me here? Let me know in the comments if you feel like you're forced to be a speculator just to keep up. You can't leave your money in the bank because you're going to get killed by inflation and taxes, right? You're going to get taxed on the interest you get from bank deposits. And when you pull them out, they're not going to keep up with inflation in many cases. And then you still have to pay tax on that interest, which was supposedly a gain, when you're not even keeping up with the inflation, right? So you're lose, lose, lose. Very similar analysis for bonds, but with bonds, you take off the government insurance for deposits, and you layer in that additional layer of risk. We're talking about corporate bonds here versus U.S. Treasuries. U.S. Treasuries, you take off that risk, but you lose some return, right? So no matter which way you look, you're speculating. And then the other way you speculate potentially is to own real estate, right? Whether it's your primary residence or investment properties. Now you're speculating on what's going to happen in the future of the market. And with, a trend towards a lower population, with a trend towards people having more and more difficulty meeting ends meet, is real estate a good investment, especially with the government intervention that happened recently where, landlords were basically told that their rights were secondary to what the government wanted them to do with their property, right? This all happened in the last, 5 years, which is a very shocking revelation, which adds to the speculation piece of it. Now you, as a landlord, are speculating whether another one of these, very unusual black swan type events is going to happen again, which is going to upset your investment returns, right? No matter where you look, you have to figure out what's going to happen in the future. You have to speculate. You have to place a bet. And then you have to hope the government pulls the lever you want. You got to pick the channels that are most likely. Well, one thing I'm betting on personally is that the U.S. is not going to fix this deficit problem, regardless of who the president is, regardless of what's happening. There will not be the political will to actually get the budget the right way. Maybe there will be cuts. I do expect to see a fair amount of that, at least attempted until the litigation kicks in. I think the government may get somewhat smaller in some respects. Whether revenues coming in is going to match expenditures going out, I find that very doubtful, which means we're going to have that inflationary push from the spending and the money going out, both through entitlement programs, through government jobs, through other channels. Money's going to get out, flooded into the economy, and it's going to float back in higher profits. And I think that makes, at least in my point of view, stocks a quality investment. I know a lot of people are concerned about the super high valuations based on historical numbers. They're concerned that that might be a bubble and that everybody's going into the stock market. But I think everybody's going in because we know that the inflationary cycle is going to come. At least that's the way I'm going. Not investment advice. Talk to your investment advisors. Make your own decisions. I'm just talking about what I'm seeing and how I'm partially placing my bets. But diversification seems to be a great idea too, now that we know this, right? We need to be in multiple of these channels so that if a channel we're in does not turn out to be the winner, If something disrupts, if so government pulls a different lever than we thought they would, we've got to have some backing, right? So you want to be looking at all of these different channels and which ones you want to be in. But all of us now are forced to put our speculator hats on, and that's something we're going to be talking on more about here on the channel. Hopefully join me in the comments with your thoughts and ideas, and we'll have future videos coming up to help you understand more of what's going on. But for myself, this is an underlying principle that I've taken to heart here in the last couple of years. We are all speculators. We are all forced to be speculators, both through monetary policy, the printing of money, how that's happening, along with investments and how that's happening. All of us are forced to do that just to try to keep up. And if we're not out there at least being somewhat speculative, which is a very scary word, if we're not doing that at least a little bit, we're probably going to lose out to inflation and watch our assets actually become less and less powerful over time. What do you think? Join me in the comments. If you're getting value from this and you want more thoughts about this, go check out our past videos. Consider subscribing to our channel for the future, and certainly share this out. Get your friends in the conversation, have them comment, talk with me, and let's build a community around doing what we need to do through this very unusual time. I'll be bringing you more thoughts and ideas in future videos. Let's tackle this together. Looking forward to hearing your thoughts and ideas in the comments. I'll see you guys soon.